Hello guys, my name is Alex and in this video we're going to talk why it is so important to invest. And if you did not, please subscribe to our channel and ring a bell and let us begin. Many of you think of an investor as a Wall Street financier who does a complicated calculations, or as a big business owner who buys and sells millions of dollars worth of assets. And certainly they are the part of the market. But lately, the vast majority of investors are ordinary people. You can see them on streets, they are probably your neighbors or even your friends. Nevertheless, all investors, large and small, understand the main financial law: money must work. Work for your dreams, for your future, a comfortable retirement, or your children's education. In this fascinating digital era, everyone should be able to wisely manage their finances and multiply their capital. As difficult it may sound, it can be learned, and in the following videos, we will explain you how it can be done. So, why do people invest in general? Let's highlight the main reasons. First, as we have already mentioned, if you have a financial goal, a new car, a house, or education, investing of your savings will allow you to achieve this goal faster. Second, secure your savings. Right now, the whole world is shaking by the different crises. If your country's economy is weak or under pressure, your national currency will lose purchasing power. And if there is a full blown crisis, it can be seriously devalued. For example, after a failed land reform in the 1990s, the Zimbabwean dollar was in a hyperinflation for almost 15 years, constantly depreciating by thousands of percent. At one point, people used bills instead of wallpaper in their homes because it was cheaper. In order to avoid this kind of risk, many people invest in stocks of foreign companies. This way, they invest in the economy of another country and diversify or reduce their risk. The rule of diversification is the golden rule of investing. Don't put all your eggs in one basket. Third, battle with inflation. You would have think that some currencies don't depreciate in value, the United States dollar, for example, but actually this is not true. Check this out. The United States dollar lost 20 times of its purchasing power in the last 100 years. So, what you can buy in 1913 just for $1 worth about $20 in 2013. Of course, there is no point in comparing the United States dollar and Zimbabwean dollar, but the reason of the fall in the both cases will be the same: inflation. That's why if you just keep your money at home, it will simply depreciate in the end. And if you put it on a bank deposit, the real gain minus inflation will be minimal. But if your funds are properly and efficiently invested, the money will work and multiply, outpacing the inflation and generating real returns over time. Look at the graph. If we have invested $1 in the American stock market in 1900, we could have $16,797 in 100 years. Much better than just having one old dollar, don't you think? Even with inflation, we could have seriously multiply our savings. But if you choose the right companies to invest in, you can make a nice profit much faster. For example, investing in Netflix 10 years ago could have returned $1 into 50, while buying Tesla stock in just 1 year, 2020 alone, could have turned $1 into 7. However, not all companies will be always on rise. In the following videos, we will tell you the fine points and specifics of investing that you can skillfully and independently choose the best options for your financial goals.